Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
All right, welcome back, entrepreneurs. Today I have the great pleasure of interviewing Brandon Cobb, a former medical device sales rep who's become a fund manager in Nashville, Tennessee, annually managing over $22 million of new first-time home buyer housing and build-to-rent communities. He's been featured on the cover of REI Wealth, as well as Realty 411 magazine, and has been published in Forbes as well. Brandon's greatest passion is developing unforgettable experiences with those he loves and sees business as a tool to do just that. And of course, these are things that we just love here at the Foundry and fit right in with the theme of the book that I'm looking forward to publishing right quickly. So with that, I'd love to welcome to the show, Brandon Cobb. Welcome.
Hey, it's great to be here. Thanks for having me.
Yeah, great. So, love your story. Love the passion you live your life with. I think it's very, very important. Business, it's not just about the dollars and cents, right? I mean, we're here to create a legacy and to get the means to do the things that we really love to do. So, well, let's ask a little bit about how you do that by asking my favorite question, which is, you're at a cocktail party and somebody asks, "What do you do?" How do you answer?
I usually say we're the Charles Schwab of the real estate industry. And they go, well, what, Charles Schwab, what are you talking about? I'm like, well, we find lucrative real estate deals with above average returns, below average risk. We raise money from investors and we put it into those real estate deals.
Yeah, perfect. And avoiding capital loss, that's huge these days. Unfortunately, some people are suffering some capital loss. We saw the interest rates shoot up, and now we're about 3 years into these elevated interest rates. So I understand that you have a six-layer protection strategy that you implement. Tell us what that is. How do you protect your investors?
Yeah, so we'll jump into it, and I'll say that your strategy doesn't really work unless you've got a good vehicle, right? So there's two things that we really look at first before we actually go and apply this six-layer strategy to a deal. And one is making sure you're in the right area, and the second is you're in the right vehicle, right? So in COVID, the economy took a big crapper. A lot of people lost their jobs, a lot of people lost their businesses. But let's be honest, if you were in the toilet paper business, you were thriving, baby. And so we want to be in those asset classes that are doing really, really well, despite what the economic turmoil may be. And the flip side of that is we don't just want to be in those asset classes that are going to continue to do well. We want to be in the areas that do well. So how does an asset class do well, or how does an area do well? It's all about the money. You want to make sure that the money is flowing into these specific asset classes and into these specific areas. We all know that different areas are affected differently during these economic contractions and during these economic booms. And so it's all about following the money. And I've got a whole little thing we can, explore if you want, but I call it the whole follow the money method. You want to make sure you are following the money. And there's 4 types of money that you want to follow. But once you've done that, and you've drilled down, when you have found an area and an asset class that you want to go into, now it's time to provide these 6 layers of protection. And this has changed, quite frankly. This isn't something that we've always done. We've had to implement this since the economy has changed, since interest rates have gone up, since you've had a lot of volatility in the market. So this is what we're advising investors to look at, other sponsors like ourselves. And these are the 6 steps that we take to make sure that every deal we have, so that we're not caught with our pants down. And number 1 is multiple exit strategies. For us, everything we want to do is centered around entry-level housing right now. And we start with the land. Land is the foundation of every single real estate deal. Doesn't matter what building you're building, you got to have the land to do it. And so we focus on acquiring the land, and we acquire it after we've built in all the value. So kind of similar to, you guys do a lot of multifamily. Now you might buy a multifamily asset, go in and fix it up, increase the rents and increase the net operating income to force appreciate the value of the land, or I'm sorry, the value of the building. We force appreciate the value of the land before we buy it by rezoning it for higher density. We all know a piece
Right,
of
so you're doing
land that
all
you
this
can build.
during your due diligence, correct? So then you
That's
don't have, well, I want to say you don't have any risk. I mean, you're going to lose your EMD, but very little risk compared to the total amount.
That's exactly right. We're force appreciating it before we buy it. And the beautiful thing is once you have a piece of land with all this equity, you can do one of three things with it. Number one, you can just sell it to another developer who's going to develop it. Number two, you can syndicate funds with investors and you can be the developer and you can sell that piece of land to a builder that is going to actually go vertical on it. And when I say develop it, I mean put the roads, the utilities, the infrastructure in, create even more value. That's exit strategy number two. And then exit strategy number three is if for whatever reason those two don't work out, you now have a piece of land that you own outright with your investors. There's no debt on the deal. And you have the ability to go and build and sell the homes. And so we've got three exit strategies there. We can just entitle, force appreciate the land, and then sell it once it's done, develop and sell the developed land. Or number three, we can actually build and sell the homes. And so that's the first layer here that we're talking about.
Okay, I was hoping you're going to just head right into the second, but maybe I'll prompt you with a question. So okay, so well, what's your second layer of protection then? So first layer is making sure you acquire the land properly by right.
Yeah, that's right. So multiple exit strategies is number one. Number
Okay,
two is being
sorry,
able to
go ahead.
control the debt. And so a lot of deals we do, we don't have a bank note that's going to call it due. We only introduce bank debt when we are to the point we're actually going to build and go vertical on the houses. Everything up until that point is done with 100% investor equity. So we own the deals outright with our investors. And if it gets to that third exit strategy where we, want to build the homes or we need to build the homes, that's at that point, what we would do is we would then introduce bank debt at that point where we know we can kind of, build these things in 8-9 months and get out of them. So we've got the ability to control the debt through the process up until building the homes. That's very important because if you get an economic contraction where you're stuck with this land and you've got a bank note on it, the bank's going to call the note due, and that's where investors lose money, and that's where you do. So that's the second thing. You want to be able to control the debt on the deal as long as possible. The third layer is the ability to hold the asset, which plays into number two, which is being able to control the debt. We bought a 74 home development back in September of 2022. Worst possible time you could have bought something, but we had spent a year getting all of the rezoning done, getting all the entitlements done. The value was there. There just were no buyers for it. But because we work with private investors, we were able to acquire that deal and we held on to it for a year and a half. We waited for things to shake out, and we are now developing 74 pads with an end buyer in place to buy all the pads once it's done. Because we bought that with our investors and we had the ability to hold on to it long term, we didn't have to worry about monthly payments to a bank or somebody calling our note due. So third is ability to hold the asset. You want to make sure you're building that into all of your underwriting. The fourth layer that we've kind of talked about already, and this is huge in the multifamily world, is you want to make sure that you can force appreciate the value of the asset. And where things are a little different, like we used to, 8 years ago, we used to flip houses, right? And you buy the asset, you then force appreciate it through renovating it, and then you sell it. And so there's a little bit of risk there because you're having to buy it at, value or maybe a little bit of discount, but equity is not there until you force appreciate it. What I love about what we do is we're putting assets under contract and buying it after we have done all of the forced appreciation. And again, we do that through the rezone process, taking it from 1 or 2 homes to 100 homes on this piece of land, building in massive amounts of equity for ourselves and our investors. And then we buy that asset. It'd be very similar to putting a multifamily deal under contract and buying it after all the renovations are done and all the equity's there. That's kind of what we're doing. So you want to make sure that you've got some kind of plan to force appreciate the asset. And number 5 is right now, we're doing the best we can to make sure we have an exit lined up. In other words, we're not just throwing real estate deals on the market and hoping that it sticks. Whenever we're getting a piece of land under contract, whether we're building the homes and selling the homes, or we are developing the land and selling it to a builder, or we're just entitling it and selling the paper lots to another developer, we have time to line the end buyer up. In other words, we're doing work while we're doing due diligence to line a builder up, to line a build to rent fund up, to pre-sell the homes to the end consumers, to sell it to a developer so that we're not stuck. Time is a risk. The more time your deal spends on the market, the more risk there is. And we eliminate that time risk by lining up our end buyer first. So making sure your end buyers line up, that's number 5. And then finally, number 6, downside protection. This one of the deals we're doing right now, we're developing 74 pads for another builder. Those lots could go from a value of $85,000 per lot to a value of $61,000 per lot, and we would still break even on the deal. So we can take a roughly 25% haircut in the market and still break even. That's something that I feel very, very comfortable with. So you don't want to build in these little 8-10% blips where you're losing money if that happens. You want to make sure you have deep margin deals where you've got downside protection. It's a very far fall before you start to break even in the event that that asset's value starts to turn the other way. So those are the 6. That's the 6th one, is you want to make sure you've got plenty of downside protection built in. And I think that's why a lot of people are struggling right now, especially with their commercial and multifamily and all these deals people bought with bridge debt, is they were kind of banking on the market continuing to appreciate, interest rates continuing to go down, cap rates continuing to compress.
Right.
And they didn't. They went in the opposite direction. There was no
Yeah,
downside.
margin of safety, downside protection, and the ability to hold on to the asset. Well, I see the famous face of Warren Buffett behind you. He's someone who definitely had a lot to say about margin of safety. But I couldn't possibly say enough about those 3 things. Yeah, a lot of people haven't thought enough about those. Well, my family also in the construction industry. You know how it is. Everybody's building the highest end. That's usually where the highest profits are generally believed to be found. But you're taking a bit of a different approach, or maybe I'll just set it up like this by saying years and years of builders doing that, which again made the most sense at the time, has really set us up at a point where we don't have a whole lot of lower end or entry level housing. That is to say, other than the housing stock that would have normally declined over the years, which with all the flipping activity, which again is generated by the fact that we don't have a whole lot of new construction, has meant that we don't really have the same number of homes that would be declining in value or in disrepair that we would under ordinary circumstances. Okay, so just to head right into it, you're taking a bit of a different approach, but one that's gaining some steam now. So why do you think entry level housing is the way to go?
Supply and demand, right? Everyone's talking about the affordable housing crisis. When I say affordable housing, it's not Section 8 or government housing we're talking about here. We're talking about people who are trying to get into their first home, a very basic 3-bed, 2-bath house that they can afford. What is that exactly? It's where your mortgage is somewhere around $2,300 to $2,600 per month. And so that's going to put the home somewhere in the mid, 300s, depending on how much of a down payment you have. This is what the nation needs, and we do not have enough inventory. It's the most undersupplied, highest demand real estate niche out there, and you hear about it all the time. You've got 33% of the home buying population that needs these houses. They're millennials. They're, they're coming up, they're in their, 30, 35 years old. They're having children. They're looking to start a family. They're looking to buy a house. But only 10% of the homes being built are entry-level housing. So you have this huge supply and demand amount. You have 33% of the market chasing 10% of the homes. This is what's creating this huge demand imbalance. So this gives us a fantastic runway. What's caused this? Well, in 2008, 2009, a lot of builders went out of business and the market just has not recovered. I would encourage everybody to go look at the Freddie Mac data. There's really good data on like new construction starts, and you can see it all the way back to the 70s. We just haven't been building homes at the same level we have since 2008 because so many builders went out of business. And so there's so much demand for this product that is where we want to be. This has a phenomenal runway. No matter how you slice the data, we're years, if not a decade away from being able to catch up with the demand for this specific niche, entry level housing.
So yeah, let's dig into those numbers. If we were building 1.5 million per year, which is our long run average since 1960, wow, the number would be 8 million. Now, looking at things like household formation, some people are getting a smaller number, like 5 million. But anyway, you slice it, we're back to building about 1.5 million homes a year, which means we're essentially at replacement. And with immigration probably running ahead of past numbers. Official statistics show it to be lower than in the past, but I think we all
Yeah.
know that it's higher. So we got more people in the country, and at best, we're building at replacement level, or to keep up with a growing population, we might say. So yeah, I mean, to build that 8 million homes, just to put some numbers on it, let's say we start building 2 million a year. So that's in excess of a half a million. That would take about 16 years to get us back to where we ought to be. So I don't think we've ever built more than I think 2.4 million in a year. So I mean, even
Yeah.
we get up to literally the historical max and stay there, it would still take us probably a decade or so to catch up.
Yeah, you hit the number on the head. 1.5 million is just what the market needs right now. So to catch those up, and depending on who you ask, on the low side, we're 3 million homes short. On the high side, we're 6.5 million homes short. However you slice it, you gave a perfect example where you said, hey, if replacement or what the market wants per year is 1.5 and we're building 2 million, and so we have a 500,000 surplus, you'd have to build 500,000 extra homes per year, and let's say it's just 3 million homes short on the short side, that's going to take 6 years to do if you keep up with the 2 million per home per year capacity. It's a lot of
It's a
catching
lot.
up.
And then, of course, with the interest rates rising, that's taking a lot of people out. And I'm glad you mentioned, I mean, it's something every time it comes up, I point out how we have literally wiped out a generation of builders. And it's going to take a lot of first generation builders like in my family. And I guess I didn't ask. So you first generation builder as well?
Yeah, I'm a first generation builder.
Yeah.
Yeah, my dad was a
Well, it's going to
computer
take a long
engineer. My
time. I
mom
mean,
was a
yeah. Yeah, when those second, third, fourth, and fifth generation builders got washed out, never to return, it takes a long time for people to dip their toe in the water. So we got financing, we've got the issue of just, I mean, literally losing a lot of the experience in the industry. Yeah, I don't see this getting solved anytime soon. I'd let things get out of whack, in my opinion, right? Super low interest rates, overbuilding, etc. Ruined economy. Anyway, not all the Fed's fault. We're not going to talk about the GFC today, unless you want to.
I'll go wherever you want the conversation. The only thing
Okay,
I would
okay.
add is you,
That's okay. If you have anything to add, go ahead, but I'm not going to
yeah.
I won't press.
The
Okay,
other
yeah,
thing
good.
that's really suppressed things is the supply chain, which we're kind of getting back to normal. That's prevented the availability of a lot of materials. The backlash from COVID, just everything shutting down, the supply chain shutting down, the lack of availability of materials, that's only exacerbated the problem because you can't get the supply of new homes to the market without that. And so literally some of the production times, I think at the worst doubled. So instead of getting new inventory to the market in 6 7 months, it was taking over a year because of the lack of availability of materials. And so you're still seeing that a little bit, not quite as much, but that's only going to help exacerbate the problem.
Yeah. Well, anyway, one of the things we need to do is work with the city. You talk about cooperation, and that's really the way things go. But I know so many people that are new, whether it's to construction or whether it's just renovation. The city is last person that they want to talk to, but it should really be the first. Anyway, where would you take that? How do you build productive relationships with the city and make sure that you're on the right track early in your projects?
Yeah. So what I advise a lot of people do who are trying to get into doing what we're doing is that they usually will go out, find a piece of land, and they try to shove it down the city's throat. And so we took a different approach. What we did was we identified the communities that were developer friendly, that needed it, that had entry level housing. So you won't see us going to municipalities with, there's $1 million plus homes. We're going to the ones where it's entry level housing and it's good for that market and that local economy. And we're sitting down with the planning commission and we're going, hey guys, you know, we want to work with you, not against you. So we pull up a chair on the same side of the table and go, what's the vision for the community? What's lacking? What are the citizens complaining about? Which developers have worked out really well for you guys in the past? What did they do? Which ones haven't worked out? What did they do or what did they not do? And so we want to be, it's a team effort to build this community and build this vision. And so they'll tell you, like, oh, yeah, this is where we'll support density. And so that's where we target. We pull up a map and go, all right, show us. And we go to the areas that we know that they're going to support that density. And we will go and we will be very, very, we don't talk to a lot of homeowners per year. We're very focused on our approach of who we go after because we have such a compelling value proposition for the landowners or the people who have a house on, 20, 30 acres. It's, hey, your home's worth $500,000. If we could give you $1 million for it, would you be interested? And they're always like, well, yeah, how are you going to do that? And that's when we start explaining the process of, hey, we're going to take this piece of land and we're going to rezone it to put 100 homes on it. That's how we can pay you $1 million for it. And so we've got a very compelling value proposition. And so when we do that and we bring that opportunity to the city, we don't have a lot of pushback because we know that they have already told us that they would support that. So that's very important. People want to work with you when you discuss what they need and what they want first. And times you might bring them something that maybe isn't in their vision, but because you've scratched their back, they'll go, okay, Brandon, you've worked with us. You've been great in the past. Yes, we will support this particular development for this area. Even though we're not going to get everything we want, right? The city's always going to like, we want more parks and more green space and all that. Like there's a relationship here because as a developer, you still got to make money for it to work. And so there's a relationship that you have to build with the city first. But it all starts with pulling up a chair on the same side of the table and working with them.
Yeah, so ladies and gentlemen, listen, this is the voice of experience. Make that call to the city, the first call, not the last call.
Yeah.
And again, love the way that you are getting it all done during the due diligence period. Of course, that should be common sense, but I'm telling you, I talk to a lot of investors that I think they're just going to close it and then they're going to, yeah, like you said, ram it down the city's throat. So don't do that. Now, talking about solving the affordable housing crisis is something that everybody talks about. And, one of the points I would make about politics is that people say like, oh, politicians, this party or this politician, their policies don't make sense. Well, they always make sense. It's all about getting votes. If you think that the politicians are there to run the economy well and to make sure that your city is safe and happy, that's not
Yeah.
what it's all about. So when you look at it from that standpoint, that politicians are just vote getters, there's always a certain logic to it. So you really can't be, you can't take it, you got to take it on the chin, roll with the punches, and just understand that there are, like you said, some areas that are going to be developer friendly. And there are going to be other areas where the politicians is just going to grandstand and say, hey, our community is nice. We like it the way it is. Well, those communities are just not going to grow. Well, anyway, enough soapboxing here. The main idea here is, from my standpoint, everybody's going to say they support affordable housing because it sounds nice. But what does that really mean? Does it mean that we're going to allow builders to build at, for example, a higher density? Are we going to remove some of the red tape so that it takes less time to go from concept to completion? These are not easy things for the city to agree to, but again, where the rubber meets the road is where people are actually willing to kind of give a little to get something. So anyway, a couple of things that I think are standing in the way of more affordable housing. Well, what would you say, Brandon? What can developers do and cities do to work together to create more affordable housing?
Yeah. So I'm going to answer it two respects here because there's some bigger stuff that really needs to be addressed that the local guys can't. So let's look at the bigger macro, and then you kind of address the micro, like on the local level. Macro, people aren't buying the house; they're buying their mortgage rate. Okay. So that's very important to keep in mind. The mortgage rate is what they are buying, not necessarily the house. And so, first, as a politician, you've got to get that under control. So, you've got to address the key reasons why interest rates have done what they've done. The Fed has said they've raised rates because of inflation. Well, how do you get inflation under control? This has been something that was caused by specific policies with the current administration, trying to make things more green. They made a lot of incentives for the energy sector. They put policies in place that skyrocketed oil prices. I mean, I remember when oil was almost $5 a gallon where I was back in, the spring,
Well, what are
summer
you
of
talking about? You're not talking
2022.
about, shutting down pipelines, et cetera.
Yeah, all that stuff, right? You've got to address the problem. So the inflation was caused by energy prices because when oil prices go up and energy goes up in general, all it takes energy to get all of your products that are in the grocery store that you go and buy. It takes that there. So when oil prices go up, energy prices go, everything else goes up. This was these interest rates, the inflation was caused directly by the political policies that they put in place. So you have to do something about that. You have to get that under control first. You've got to get energy prices under control. So they need to create some incentives to start bringing down energy prices first. That's a really big thing. The other thing that caused interest rates to go up or
So
inflation
wait, you're
was the
telling me
supply
that you're not
chain.
using electric backhoes out there in your projects?
I'm not using electric backhoes,
Oh,
unfortunately.
I'm so disappointed.
Unfortunately, the Teslas are really cool, and I'm a big supporter of the Tesla cars. I love Elon Musk
Well,
and everything he
someday,
did.
someday, I love it too. I mean, like,
Yeah,
I'm a PhD, so anybody who thinks I'm anti-technology, I'm just going to say you're off, you're not. But
yeah,
all right, since I cut in here, let's talk a little bit about the pipelines. I think one thing we can hopefully do is help to educate the public, because if we can do that, maybe people will demand better policies. But pipelines, you mentioned. So, or actually, I did. So, it turns out that's second only to shipping by sea or shipping, ships in terms of cost and also in safety. But it turns out it's difficult to get oil tankers into the to the center of our country, for some reason. We just
yeah.
need these pipelines, and if we do it by rail, it's dangerous, it's more expensive. I would just hope people can just be rational and say, it's not like I love fossil fuels, Brandon, but we need them, right? We don't want the lights to go out tomorrow. I don't want to go back to the Stone Age. I want my Tesla too, but I don't want to have to pass through the Stone Age to get to it.
Yeah. No, you hit it on the head, right? You've got to be able to get the energy prices in control. You do that, I promise you rates will go down. And the other thing is addressing the supply chain issues. Again, when you have less products on the shelf, less materials to build houses, more demand for those materials, prices go up, right? Supply and demand. It's very simple. You've got to get the supply chain and logistics under control. And it's starting to come back. It's not 100%, but you've got to get that in control. The politicians not paying attention and incentivizing that to get fixed when it was a problem has caused the inflation, which has caused the rates to go up. So from a macro level, you've got to first address those two big issues if you're going to address the affordable housing issue. Now, on a local level, which you mentioned, how can the city work together with developers to do this? Well, you hit a couple key points right there, which is working with the developers, not charging as much, impact fees, because any fees that the developer gets charged is just going to get passed on to the homeowner unless there's a really good reason for it. Sometimes a community needs some really high impact fees to be able to reinvest back into the community, and that's fine, that's good. But working with them to create the density that they need, because density equals more supply, and more supply means lower prices for homes,
Right.
right? That's the key there. So the cities need to be a little bit more developer friendly, but where they go wrong, I think, is they don't have a plan for the controlled growth. They need to start reaching out to some of the other municipalities that have responsibly grown, that have done it in a way that was a win-win for everybody. Where I see people go wrong are these municipalities that didn't have a lot of growth to begin with, and it's new for them, and they're sort of just figuring it out rather than going and meeting with some of the other municipalities that are more mature, that have grown and done it in a right way. Because the biggest threats that I get all the time are like, you're coming in and changing the community, like our small town feel is changing. How could you do this, Brandon? We don't want developers in here. And a lot of times they've got a bad
Yeah.
taste in their mouth because the city has approved these very distasteful developments. They've let a lot of things slide. They've killed a lot of the green space. Where we try to give back is it's not just about ROI. We're creating these communities with dog parks, with playgrounds, with lots of greenery. Sometimes we're planting more trees than were even there before. And so we're trying to create something that community is actually going to enjoy that's not just ROI based. And so the city needs to be a little bit more open to allowing the developer to put the density they need, but building in the amenities that the community also wants at the same time.
Yeah, absolutely. And, a lot of these people who say they're against developers, I mean, they didn't seem to mind the fact that some developer built their house. But
Yeah. Yeah.
anyway, but another interesting thing, and I'm glad you brought in the macro, and I think that's really beautiful. I mean, we could just talk about how, government shut us down, gave everybody a check, printed money to make it happen. That led, I would say, is the main reason we had inflation, but a lot of other ancillary things, as you pointed out, energy costs. That certainly feeds into it. That's part of our headline number. The people who talk about core CPI and say, that we
Yeah.
should exclude certain things. I think sometimes they forget what it's like to have to actually go and pay for the gas. It's real.
Yeah.
I mean, we can point out that it's more volatile and exclude it from the statistics. But again, yeah, some of it's monetary, some of it's energy, some of it's, I mean, we could even talk about food policy. I don't really want to go into that too, but our energy policy impacts food too.
Yeah.
If we're going to turn corn into ethanol, which is a net energy loser, but never mind. It makes people feel good. Corn farmers like it too, but part of the problem. Supply and demand, high-end housing. Just to take it from the other end, a lot of people say, well, hey, that's just for the rich. That's not good. But it's actually been shown that through supply and demand, as you introduce any housing to a community, right, it tends to make all housing more affordable. And again, it just gets right back to supply and demand. But anyway, some recent studies on that. Anyway, we go at it. We're going to need a whole lot more units. So definitely 100% in agreement with you there. I hope some people are getting some ideas here. We need to do something if we want affordable housing. Talking about it
Yeah.
really doesn't do anything.
Yeah. Love the points that you mentioned there. They make 100% sense.
Great, great. Well, I know you have some great material online for interested investors. I know if you head out, I believe it's to your company website, you've got some great material. I believe that's 100 questions that business owners should ask before investing. Why don't you tell us a little bit about that resource and how people can get that?
Yeah, so no matter where you're at on your investing journey, if you're trying to build and leave a legacy, if you're trying to create passive income from real estate so that you can impact those you love and ultimately retire, we've got a great resource on our website. It's a free ebook, 100 questions business owners ask before investing. I wrote that ebook because one of our investors called us one day and said, "Hey, I've got a friend of mine who lost all of his money in a real estate investment with somebody he trusted. Could you take his call and help him out?" And I said, "Sure." And it became very clear early on in that call that there was not a lot that this gentleman could do after hearing his story. He did not have the right paperwork, the deal wasn't structured right. And it became very evident on that call that he lost his money, all of it. It was about $150,000 because he did not know the proper questions to ask. You see, questions unlock the answers we need to make more informed decisions, whether investing in a deal or doing anything. A lot of times we don't know what we don't know when we're doing something new. And so I wrote that book in an effort to prevent this from happening to just one other person. I said, we can just prevent this situation from happening just one other time. This will be worth it. So you can go on our website. It's hbgcapital.net. That's pronounced Harry Bob Gary Capital.net. I joke someone stole the .com, so it is .net, but you can grab that on our website. We've also got our own podcast, Recession Resistant Real Estate Radio, where we do tons of investing topics and how to find good investments. We interview entrepreneurs, sponsors on that. So you can check that out as well. And then there's a bunch of educational resources about, kind of what we do and how we do it with investors. So you can go to our website, hbgcapital.net, and pick up all that for free.
All right, wonderful. I really appreciate that. And beautiful story too. I mean, sad, but great that something good came of it. Everybody who takes the time to seek wise counsel before investing potentially prevents a great deal of heartache. I mean, the best way to build a field is to invest and make money. Best way to kill it is to lose money. It's not helping anybody when people invest unwisely. Very, very sad. Hopefully, we can help to educate people and get capital where it needs to be. There are so many good projects that are flourishing, and wow, if we just get the money in the right place, get that economy booming again. Well, anyway, at the end of each interview, I always like to see just how much value we can create in a short time. So here's our lightning round challenges. Give us your best answers to these 7 very essential questions. So, Brandon, you up for the challenge?
I'm up for the challenge. Let's do it.
All right. Okay. All right. You ready? Let's do it. Okay. So here it is, the 7. If you could be known for only one thing, what would that be?
Here lies Brandon, and I guess I'm reading from the tombstone here. Here lies Brandon. He created unforgettable experiences with those he loved. I want to be known as a family man more than I do a successful, real estate guy.
What's the greatest lesson in leadership you learned as an entrepreneur?
Who, not how. I remember when I was wearing 7, 8 hats and I wanted to give up because I was doing too much. Instead of asking myself how I should go about doing something, I now ask who. My job as the CEO of the company is to figure out who I can plug into this, who can do it better than me and more efficient than me. That has been a game changer.
Personal characteristic has been most pivotal to your success?
Personal characters, I think that I leave a really good first impression. I know this sounds kind of weird.
All right.
I think that that's worked out really well in what I do. That comes from my background in doing medical device sales, building product sales. Like, I just love meeting with people, and every single time it's a genuine interaction. And I think that served me really, really well.
Oh yeah, absolutely. And being a podcast host, making a good first impression should definitely be among your top characteristics. How about this? Let's add a little randomness to the universe. Not that there isn't enough already, but
I
tell me when to
like
stop
that. It's
cutting
got
the
a
deck.
stack of cards.
Yeah, stack of cards. All right, just let me know.
All right, stop.
All right, top card. Which American landmark would you most like to see?
I would like to go to Egypt and see the Great Pyramids because
Uh-huh.
it puts in context what hard work and time can really do to something. If you spend enough time and you put in enough hard work, you can build something that'll last a lifetime.
I like it. And being a builder, I hate to say it, but Brandon, I'm sure you can hear it coming. They don't build them like they used to.
No, I know. There's a lot.
All right. So can you give us a tip or trick that investors and entrepreneurs can implement in their business today?
Tip or trip investors or entrepreneurs can implement in their business today. Never give up. And I know this sounds really weird, but the skill of grit, I think, is probably the most undervalued skill we talk about as being an investor, as being an entrepreneur. Here's the thing that you've got working for you. If you can develop this, you're eventually going to win if you stay in the game long enough. That's all it takes. If you can figure out a way to continue to survive and keep learning and be resourceful, never give up no matter what, you will eventually win. Time will be on your side. So if you can develop that skill, you will eventually win.
Right, awesome. And I usually ask people at this point to name a book that's helped to forge your leader as an entrepreneur, but I'm pretty sure you're going to name Who Not How.
I'll do something different. Same author,
Okay.
Benjamin Hardy Benjamin and Darren Hardy, I think. No, who wrote that book? Benjamin wrote it, and I forget the guy who's with it, but they're both awesome. I love the Who Not How book. But 10x is easier than 2x is something that had a bigger impact on me. I really love this concept because when you think of things linearly, like when you say I want to 2x something, you think of, oh, well, I got to go to 2 times the amount of phone calls, hire 2 times the amount of people, and it just looks like more work and your brain shuts down because it doesn't want to do it. But if you say, if I got to 10x my
Yeah.
business or 10x my investments, now you don't think linearly. You start thinking, oh, well, I'm going to have to go after different deals. I'm going to have to start hiring, different people. And it allows your brain to really expand and figure out the big changes that you need to be made. For us, for example, when I implemented this, I didn't 2x, I 10x. And so I was like, well, I need to stop going after pieces of land where, we're doing 30, 40 units and go after pieces of land where we're doing 100, 150 units. I said, hey, look, we're going to have to not build out our general contracting business to 10x. I need to get rid of it. And I need to bring in other partners who've built a successful general contracting business and do a partnership with them where I give them a piece of the deal to be able to perform. And by the way, they're better at it than me at doing it. And so when I implemented this concept, it really opened my eyes to the changes I needed to make in my business to get there.
All right, beautiful. And then just send us out with a quote to help forge our listeners as leaders and entrepreneurs.
Send us out as a quote to help forge our listeners or leaders right here. Let's see. I've heard a new one that I really liked. I'm probably going to butcher this. I'm really into all Alex Ramosey's stuff like this. But he said something along the lines of confidence is not built staring at yourself in front of a mirror, jumping up and down and screaming confident affirmations. Building confidence is created through creating an undeniable stack of proof that you are who you say you are. Outwork your self-doubt.
All right, I love it. I want to thank you so much, Brandon Cobb, for taking the time to share your knowledge and experience with our audience.
Hey, thanks, man. It was a pleasure and I really enjoyed it.